Hi everyone, and welcome back to Building Wealth Through Home Ownership. I am Liz Holterhouse, your go-to real estate expert on the Outer Banks and Northeastern North Carolina. In today's episode, we're going to be tackling a topic that stops many people from taking the leap into home ownership, and that is fear. Ever thought that you can't afford to buy a home right now, or you have thoughts about market crashing, prices going up, prices going down, all that kind of stuff? You're not alone. These fears are common, but they're also based on misconceptions. So let's debunk these myths together and replace your fear with confidence. The first fear we're going to address is the one I hear all the time. I can't afford to buy a home right now. Here's the truth. Until you do the math, you don't know what you can or cannot afford. We all need a home to live in, so something is affordable. Let's do some math and let's dig deep into what that may be for you. So let's break it down. Many people assume that they need 20% as a down payment to buy a home. While that used to be the standard, there are now programs that require as little as 3.5% down or even zero down for qualified buyers. So if you're buying a $250,000 home, a 3% down payment is just $8,750. Doesn't that sound a lot more achievable? In addition to lower down payments, North Carolina is also, every loan program has access to down payment assistant grants and other types of down payment assistance programs. In addition, if you are eligible for VA, you can borrow with zero down, and FHA is 3.5% down. Typically, sometimes it can be a little bit lower. There's USDA Direct, which is for rural areas. Not all areas of North Carolina qualify for that program, but most of northeastern North Carolina and Currituck County and Dare County do qualify for that program. And that program is zero down with a subsidized payment. So right now, for instance, that program is locked at 4.75%, which is a whole lot better than the 6.75 or 7% interest rates that we've been seeing recently. And then in addition, there's a subsidy overlay on top of that. If you can't afford 4.5% interest each month, the floor of that program is 1%. So recently I did a loan that was close to $300,000, and their mortgage payment with principal, interest, taxes, and insurance included was just a little over $1,100. And that, my friends, is much lower than any of the rent around here, and it's a home that you own. So there's many down payment assistance programs available for first-time buyers, and these help you bridge that gap in making homeownership more accessible to more people. The second myth I hear, or the second fear I hear, is I should wait until the market gets better. Let me just be honest with you. There's never a perfect time to buy a home, and the market is always changing. Interest rates go up, interest rates go down, inventory fluctuates, and prices shift. Right now, there is a housing shortage of homes for sale, and I don't see that changing anytime in the next couple years. So I'm not sure that you can time the perfect market, but if you need a home, then that is the perfect time to buy. The key to focusing on finding the right home for you at a comfortable price. Remember, when you're buying a home, you're investing in your future. Even if the market changes, you'll still be building equity and reaping the long-term benefits of home ownership. A lot of people ask me, can I refinance later? Absolutely. And here's a pro tip. If you're worried about interest rates, keep in mind that you can refinance your loan later if the rates drop. As we like to say in real estate, date the rate and marry the house. I often hear another fear, people saying that my credit is not good enough. This is a big one. While it's true that your credit score plays a role in qualifying for a mortgage, it's not the end of the road if your score isn't perfect. There are lenders that have options for buyers with credit scores as low as 580. And if your score needs some work, there are steps that you can take to improve it, like paying down debt, keeping your credit utilization under 30%, and disputing any errors on your credit report. Your lender can help with tools like this, and they often have a what if simulator or rapid rescore program. If you're just now starting your search or your research, I guess, into looking into whether it's the right time for you to buy your first home or not, I would suggest, for many reasons, and I use it myself, is to download an app called Credit Karma. This app makes it so easy to never miss a payment, things like that. If someone dings your credit, runs your credit report, it dings you and it lets you know. So if it wasn't you, you can dispute it immediately. It's a great fraud prevention tool, but it is also a great tool to monitor your credit score, and it will give you clues as to how to raise your credit score up. And finally, let's talk about fear number 4. I can't afford my dream home. Here's the thing. You don't have to buy your dream home now. The best way to get closer to owning your dream home is to start with your first home. And honestly, there are events that occur in life that change the definition of our dream home. So, when you're first starting out, any home will do just about. I don't want to say any home will do, but you know what I mean. It's just maybe you, your spouse, your significant other, your partner, and you just want a cute little home. Size doesn't really matter. Then we move on, and maybe you're married and you're expecting your first child, or maybe you're expecting your second child and you've outgrown your current home. Then you're looking to upgrade, and then you may upgrade one more time. And then by the time your kids are out of the house and entering college, you're looking to downsize. And then maybe you're looking to add a vacation home, things like that. All of these things become easier once you own one home. I wanted to stop for a second and tell you my story of homeownership. So in the 90s, right after I got married, I wanted to own a home. I wanted to buy a home. And my husband and I were not making a lot of money. He was a builder. I was a paralegal. And we had the option to buy a lot in a subdivision that we loved in Lower Currituck County, just before the Currituck Bridge. The lot was $12,500. It seemed like so much money back then. And the owner had come to the attorney that I was working for at the time and said that he would sell it to us and he would owner finance it. For $1,000 down, I was able to buy that lot, owner finance it for interest only until I could figure out how to build a home on that lot. I think our payments were only like $120, $150 a month. It was very, very inexpensive. I then walked next door to a mortgage company called Margaret and Company, and I spoke with Connie Steinstra, who was a really big loan officer on the beach at that time, and filled out my application and figured out that we could owner contract our own home because we were in the business of doing that. And we applied for our credit, and this is what we were told. If you do 1, 2, and 3, you will be approved for X. And the biggest thing is we were self-employed like many on the Outer Banks, but we weren't really acting like business owners. We were putting our business money in our personal accounts. It was really hard to define what was personal funds and what was business funds. Essentially, we were commingling everything. And mortgage companies don't like this. So we had to separate the two, open a business account, and get pretty official and pretty intentional on running those businesses. She told me if I did this, it should take about 6 months, come back, and I would be approved. Long story short is it took me about 3 months. I went back to her and I was approved. We then built our first home. when we put the last nail in that house, we owned $72,500 on that house. And it was a 3-bedroom, 2.5-bath house with a 2-car detached garage attached to the house by a beautiful breezeway, huge, large back deck, and a lot over an acre. So we were in heaven. I thought I would never want to sell this house. And we got to choose every finish, everything that went into it. About 9 years later, I had finally gotten pregnant and had a sweet little boy, and we were outgrowing this space. We were running 2 businesses out of this space. We were running a family out of this space, and we really wanted something bigger. And I had gone with my best friend to look at a house that was 3,200 square feet. It was just everything I could ever imagine, and it had a gorgeous in-ground pool built in the backyard, but the price tag was steep. It was $405,000. Now remember, my first home was $72,500, and I was a realtor by then, and I started looking at the comps. I knew what I could sell my house for, put my house on the market, sold it the first day to the first person that looked at it for like $265,000. We took all of that equity, over $200,000 worth of equity, and we put it down on the next house. And do you know that my mortgage payment barely went up? It was less than $100 difference. Barely went up because my interest rate on the first house was higher. Interest rates now were lower. So I'm now in a 3,200 square foot house that I purchased for $405,000 in a sound front community with sound access 2 or 3 houses down. So we stayed there a very long time. My son was 3 when we moved in, and when we sold it, he was about to turn 21. And then we downsized, sort of downsized. This was back in 21. It was COVID. We got the house ready to sell. It needed a new roof, so we put a new roof on. All those things just paid us back almost 100% when we got the house ready to sell. And we sold that house for almost $600,000. And we came to Water Lily and bought a house on the water, on the Currituck Sound. And again, I was able to put over almost $300,000 down at this point in time. And my mortgage payment here is just a little bit more, about $200 more than it was at that house. And that's the kind of wealth you build through home ownership. Each move was easy and seamless. You got to keep your credit scores good. If you're self-employed, you've got to keep your income up. You got to pay your taxes, things like that. But every step we made was intentional and was easy. And I was able to control my cost of home ownership since the 90s to 2025. It's a long time, guys. My mortgage payment has barely gone up. And when it has gone up, it's been because of rising insurance rates and taxes and things like that. It's not because housing prices rose, because once I was in the market and stayed in the market, I was paying more each time I bought a house, but I was also selling for more. So it balanced itself out. So I hope that makes sense to you. The house that we're in now, we were seeking out a very specialized house. We wanted something that we could live in, and we could Airbnb a portion of it. And that was part of our house hacking strategy as we go into retirement. And we're not in retirement yet, but that's what we're planning for in the course of the next 10 years, is to be able to slow down and have some passive income. And the house I'm in now used to be 2 fishing camps made into one house. It was torn down in 2006 and rebuilt. So it looks old, but it's newer. And a portion of the home, 2 bedrooms and 1 bath, kitchenette, living area, completely private from my home, is an Airbnb that we run out of our house. And we love hosting. We've met amazing people from all over the world, but we also love that passive income. So there's many, many ways to make your home work for you. So just think of the interest rates or your first home as that stepping stone. So by purchasing a starter home, you're building equity, which you can upgrade into your dream home in the future. And remember, the goal is progress, not perfection. And no home is going to be perfect. You're going to put the love and the touches into it that you want to make it the perfect home. So there you have it, the most common fears about buying a home debunked. My goal with this series is to replace your fear with knowledge and empower you to take the first steps towards homeownership. Knowledge is power. Education is power. Understanding is power. Power for you to be able to make an informed decision and say, yes, now might be the right time for me to purchase my first home. So coming up in episode 3, we're going to navigate today's housing market. In our next episode, we'll dive into the current housing market and share tips on how to navigate it like a pro. You won't want to miss it. If you found this video helpful, please give it a thumbs up, subscribe to my channel, and hit the notification bell so that you'll never miss an update. And if you have any questions or want to get started on your home buying journey, my contact details are in the description below. Thanks for watching, and we'll see you in the next episode. Liz Holterhouse, OBX for Sale Real Estate Group, powered by Keller Williams.